and AMC stock failure to delivers keep adding up. Since the creation of the AMC preferred equity shares, there have been millions of failure to delivers. Here's what investors need to know. A failure to deliver occurs when a short seller doesn't actually have the asset that they're selling short. There have been as many as 43 million FTDs in APE in a single day since it started trading. Nobody's quite sure why there have been so many FTDs associated with APE and AMC stock. What is a failure to deliver? In trading, failure to deliver occurs when one of the parties in a transaction fails to fulfill its obligations by the settlement date. This can apply to stock, futures, options, and other assets. On the buyer side of the trade, FTD implies the lack of money to proceed with the order. On the sell side of the trade, it implies not owning the asset to be sold. FTD is particularly connected to naked short selling, which has been illegal since the 2008 financial crisis. Naked short selling involves short selling a certain asset that you don't own or haven't borrowed. These non-existent shares are often called phantom shares. This can have a negative consequence on the liquidity of the shorted asset, as well as diluting its share price. In general, many traders and retail investors closely watch failure to deliver data. Many shareholders suspect that certain companies that have been the target of predatory short selling practices, such as naked short selling, which have hurt the performance of their stocks. The SEC releases failure to deliver data for the first half of a given month at the end of that month, and it releases data for the second half of the given month around the 15th day of the following month. The latest APE and AMC failure to deliver data. AMC preferred equity, or APE, went public on August 22nd. Since then, its associated failure to delivers have been drawing attention. Data for the 6 trading days between August 24th and August 31st indicates that there were 129,525,091 FTDs during that time period. During the same period, AMC's stock recorded 6.3 million FTDs. To get a sense of how high these numbers are, Tesla's stock reported 183,000 FTDs in the same period, and fellow meme stock GameStop posted only 265,000 FTDs. It's worth noting that if a short seller intends to deliver an asset as soon as delivery restrictions are removed, the SEC grants them 35 calendar days following the settlement day in which to close out the position by purchasing the non-delivered securities. Therefore, after this 35-day calendar period, there's the possibility that the share price of these securities will increase as deliveries are made. But keep in mind that this technically can only be considered in cases of relevant surges in FTDs, usually exceeding 1 million. On August 24th, APE registered a whopping 43.5 million FTDs. That's about $305 million worth when multiplied by the trading session share price of $7.02. In the following days, the FTD count for APE did not go below 5.6 million. And these are, running on a daily basis, right? It says during the same period, AMC shares also registered more than 1.3 million FTDs on 3 occasions on August 24th, August 25th, and August 30th. The bottom line, according to AMC CEO Adam Aron, one of the reasons AMC Preferred Equities was created was to shed light on short sellers' use of synthetic shares. According to many retail investors who bet on AMC, the main factors preventing new short squeezes are fraud and a lack of transparency about trading structures in the U.S. financial markets. And here's this tweet from Adam Aron. It says, 6. Candidly, I've seen no evidence so-called fake or synthetic shares exist, but many of you disagree. This preferred equity dividend goes only to company-issued shares, so it will have the impact of a share count or unique dividend many of you have sought. As a disclaimer, on the SEC website says fails to deliver can occur for a number of reasons on both long and short sales. The SEC also reveals that failure to delivers are not necessarily the result of short selling and are not evidence of abuse of naked short selling or short selling in general. Even though the debut of APE in the stock market has caused high trading volumes and euphoria among retail investors, it's still unclear what could be behind such high numbers of FTDs compared to the stock market as a whole. Now, let's be honest here, guys. Why is there so many FTDs in APE, right? It's part of AMC. It's a preferred equity structure of AMC. They can use both of these securities in different ways, right? Short sell lots of APE, you're going to get FTDs, right? And that's what everyone was trying to do when that stock first started trading. I mean, it's pretty clear if you look at a chart of APE, it's been pretty much straight down. And now 30 days out from August 24th, when those FTDs started, would have been September 24th. Add 5 days to that, that's going to be this trading week that hopefully a lot of those FTDs will be bought back, and it could be a pretty bullish week in my personal opinion. AMC even on Friday was up almost 2% in regular trading and up about 1.25% in regular trading, still off of its 2022 low at about $5.96 per share. So the bottom line to all of that is really there's a lot of shares that need to be bought back by institutional investors here, hopefully in this next week. That could be very, very bullish, but nonetheless, we're highlighting a simple fact here that there's a lot of manipulation that is indeed going on with AMC and APE stocks. Compared to Tesla, less than 200,000 FTDs, APE had 43 million on a single day. Tell me how that is not fraudulent, right? Nonetheless, let's move on to that because this is going to be a very exciting week and get into some of the data behind AMC, some of the data that we are going to be getting this week, because the markets are going to move a lot, especially after Fed Jerome Powell last week said what he had to say. It looks like we're at peak hawkishness. It looks like the markets have really been thrown the kitchen sink here by Fed Jerome Powell, saying that we're going into a recession, saying unemployment's going to go crazy, there's going to be pain in the economy, so on and so forth, basically saying, hey guys, we're screwed for the time being. So let's talk about it, guys. So what the Atlanta Fed President Bostic said over this weekend is that he expects job losses, but says there's a really good chance to get to 2% inflation without killing the economy. Now, let me know what you guys think about that down below in the comment section, but I think it's pretty clear to say that nobody is on the same page as Fed Bostic. Now, that doesn't matter though. The markets might look at what Fed Bostic has to say and say, maybe he's right. Maybe there's a possibility of that, and that could give us a little bit of that relief rally that we have definitely been needing. And he just said that, today, so keep in mind, we don't know what the futures are going to be. They could be very red, they could be very green, but I think overall this could be a positive thing to start off the trading week in this upcoming week. Now, most importantly, as far as data that we don't have a lot of economic data, but we have a lot of Fed speakers. So on Monday, you do have Chicago Fed National Activity Index for August at 8:30 in the morning, Fed Collins that speaks at 10 o'clock in the morning, and then you do have Fed Bostic at 12 p.m., you have Fed Mester at 4 p.m., and that's pretty much it for Monday. On Tuesday, you do have Fed Evans at 6:15 a.m. in the morning that speaks. 8:30 in the morning, you have durable goods orders month over month for August. And then you do have the S&P case Schiller home price month over month for July at 9 o'clock in the morning Tuesday. Fed Bullard at 9:55 a.m. on Tuesday. New home sales for August at 10 a.m. Richmond Fed Manufacturing Index for September at 10 o'clock in the morning as well. Fed Daily that speaks at 8:35 p.m. On Wednesday, you do have some ECB speakers, which I don't think will be a huge deal for the American markets, but we will see. You do have retail inventories excluding autos month over month advanced data for August. That comes out at 8:30 in the morning. Trades good balance for August as well, 8:30 in the morning. Wholesale inventories, again, 8:30 in the morning. Fed Bostic that speaks at 8:35 in the morning. Pending home sales year over year. Pending home sales month over month at 10 o'clock in the morning. Fed Bullard that speaks at 10:10 a.m. On Wednesday. Fed Evans that speaks at 2 p.m. On Wednesday, and that's going to be it. But for Thursday, you do have a lot more ECB speakers. This is going to be a major event here on Thursday for the ECB, and that definitely could move around the markets for America, right? You do have the final reading for GDP for Q2 2022 at 8:30 in the morning on Thursday. GDP, real consumer spending, continuing jobless claims, core PCE prices. A lot of data is being finalized this week, especially on Thursday for Q2. Now at 1 p.m. on Thursday, you have Fed Lane that speaks. 1 p.m. you also have Fed Mester that speaks. And at 4:45 p.m. you have Fed Daly that speaks as well. Now, on Friday, what do we have? On Friday, you have personal income month over month for August, personal spending month over month for August. Both of those are expected to be big data points coming out at 8:30 in the morning. PC price index, all that good stuff coming out at 8:30 in the morning as well. And then you have Fed Brainerd at 9 a.m. Chicago PMI for September at 9:45 p.m. You do have the Michigan Consumer Sentiment Final Survey for September coming out at 10 o'clock in the morning as well. That could be a pretty substantial event also. And you do have at 4:15, you have Fed Williams that speaks on Friday as well. So you have multiple Fed speakers, some of these guys speaking multiple times, and a couple key data points that will move around the markets. And it's something you guys definitely want to keep on your radar, because as of right now, the Fed controls the stock market. If the Fed were to come out with this rosy picture for everything, stop raising rates, the markets would react very favorably. If they keep raising rates and they keep giving us this hawkish tone, well, the markets are not going to react very well to that, and you're not going to see a market bottom, in my personal opinion, until that happens, until the Fed does start to act a little bit more on the dovish side. Now, regardless of all that, I don't know how that data is going to play out. I'm just laying it out for you guys. But what I do know is the data that we are being reported to us about AMC. Now, let's dive into it. So, over here on Ortex, the AMC Short Interest, the dollar amount sitting at $765.59 million. Estimated short interest of free float at 18.93%. Free float out on loan almost at 35%. Shares out on loan 178.85 million. You do have the cost to borrow at 17.22%. 4.06 days to cover and 100% share utilization. As far as the cost to borrow max, you have 42.61% cost to borrow max, cost to borrow minimum 14.39%, and cost to borrow average at 16.54%. Now, keep in mind, Friday was a positive day, and the positive order value for the option activity was also very, very bullish, 82% positive. 5 orders totaling $140.96,000. So I think that is very, very bullish, and I think that could give us or give us a glimpse into possibly what to expect in this upcoming week. And if we look at AMC stock as well, it looks like we may have hit a temporary bottom along this longer trend, really bottom that we had seen throughout 2022 after we hit $5.96 per share. We kind of bobbed up and down, but we were really around this level at about $8 per share. That's really a big level of support in my personal opinion. And it looks like after we have seen such a negative last 2 weeks that we could probably see a relief rally in this upcoming week. It's just simple. If we keep going down at this pace, you're going to break through a new low for 2022, and you're going to go down like a rock. This has been the worst 2 weeks since the COVID crash for the stock market. So believe it or not, whenever we have been in this sell-off or this sell-off or this sell-off, this one has been worse. This one has been more aggressive than any other sell-off we have seen throughout 2022, and that has been over the last 2 weeks. So I think a relief rally is definitely in store for us, but not like all-time highs or anything like that. To even get back to 400 on the S&P would be a very, very respectful relief rally that I simply don't think will happen as of right now. But who knows, with these Fed speakers this week, they might shake things up a little bit. They may make the markets a little bit more bullish than we have been. So that is pretty much going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description as well. Get your free stocks with Webull, Moomoo, and Public. Also, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.